What's up, you guys? Welcome back to Unorthodox Saving. So today I'm going to show you exactly how I pick a stock. And this is going to be a beginner video, but it should provide you with enough information that you can leave this video and figure out what stock you need to pick. But I do need to state right away that I am not a financial advisor, licensed, or qualified to tell you guys what to do. This is for entertainment purposes only. So I'm going to show you what I do personally, and I'm not telling you what to buy, where to go. This is just what I do myself. So I want to get right in and show you guys a study. So back in the 70s and then again in 2019, a Princeton professor had a few monkeys throw darts at a board where there were certain stocks on the board. And the monkeys were to pick the stocks wherever the darts hit, and that will create its portfolio, and it will go against the top investors in the world and their portfolios, like hedge funds, to see who would win. So in the 70s, the monkeys didn't actually get close to the hedge funds. They actually outperformed them by a lot. And then again in 2019, where I'll leave the article right up here, it says that the random writer picks beat the pros by 27 percentage points in the year through April 22nd. Only 3 of 12 of the Son picks even outperformed the S&P 500. That means that a monkey can outperform top of the line computers and algorithms and picks, and guys who literally do this for a living, who go into college, have multiple degrees. So the reason why I'm bringing all this up is to show you that there's an ETF where you can invest in the entire market. And that's what I do for my Roth IRA. I call it the easy portfolio. It's completely passive. So for my Roth IRA, I'll put up here on the screen, I have 3 main ETFs, which is VU, VTI, and BND, which is the international market, the entire S&P 500, and then the bond market. So the reason why I'm bringing up my Roth IRA is because if I have $100 invested every single week, starting by the age of 18, by the time I am 59 and a half, I'll have $1.8 million. Now, how do I do this? I invest $100 a week, and I usually statistically get 8% annual return with dividends reinvested, adjusted for inflation. I'll have $1.8 million in my portfolio that's already taxed at a lower tax bracket. So when I take that money out, I have exactly $1.8 million. There's no money I'm losing when I take that out. And ETFs are very, very easy to understand. There's ETF for everything. So if you're younger and you're into gaming, there is a gaming ETF, which I've put up on the screen here, that is called ESPO. And ESPO has all the major brands like Activision, the gaming companies that make Call of Duties and things like that. So if you're younger, at least what I do personally, I invest in things that I'm actually interested in because it makes investing interesting. My ETFs are my way of passively investing in the long term. Put money in this dollar cost average and forget about it. It's my lazy portfolio. Well, I know that when I go to retire, I will have a fixed amount of money. But there's your active investor. Now, these are your day traders, your swing traders. If you find a growth stock that you know is going to shoot up and you hold it for a few months and you sell it. Now, you also need to educate yourself on taxes if this is the kind of investor or trader you want to be. But I'll tell you my 2 ways of how I pick my individual stocks. My first method into investing is called quantitative analysis, and that's just a really fancy way of saying that I look at a company's cash flow, their balance sheets, their income ratio, their debt ratio, and I get a generalized number of what the actual price should be for that company. So for example, Tesla's $417 a share as I'm making this video, but it should be priced at $317, but investors, so when you invest into a stock, you're investing into the future. What the market is the prediction of what the future of that company should be. So the fact that it's $100 over its actual price is meaning that the investors who invest into Tesla think that that company is worth more and that they're gonna get everything on the nail. So most apps and brokerages will give you the information you need to be able to use quantitative analysis. Even Robinhood, which is like the most basic investing app. But I'll leave a few website links down below that are completely free, just so you guys can just use other things and just research your own stocks. These websites are going to include the company's numbers. It's also going to include the safety rating, so it's going to give you a prediction of how safe it is to invest into this company. And then it'll also give you a breakdown of the shares bought, meaning are there large orders of shares by an individual investor, hedge fund. It won't give you the actual information, but it can tell you that. Even Webull tells you that, but these websites are all there in case you want to have everything in one place. And a lot of day traders and swing traders use these websites and get the information from this. for a very simple reason. Once they figure out a company's real price, when you see how many shares are bought and everything, they look at the charts, and if they see something that's very predictable, they'll invest in it and see it goes up because they understand the real price is lower than what it should actually be. I'm making it seem very, very simple, but it's not simple. Day traders and swing traders lose a lot of money, and there's statistics out there proving that it's not worth the time. But hey, I even do it myself a little bit. I use it. It's only 5% of my actual net worth goes into these, which I call spec stocks, which are like what I speculate will go up very fast in the short term. Sometimes I'm right, sometimes I'm wrong, but you know you have to have a little bit of fun when you invest. Second way I pick a stock is called qualitative analysis, which I just refer to the word quality. So all that means is what is a company's worth? Is it needed in its sector? Does it always have sales? Meaning, is it always going to be needed by the consumer? Or will it be needed by another company? Is it a future spec stock that's going to be needed in the future, like environmental stocks? Or what I use personally, if the company is usually boring, I think it's a good investment. For example, Johnson & Johnson is a very boring company, but it's always needed because it's such a broad company of what they do, and they performed very well during the pandemic. Even right now, their dividend safety rating is a 99 out of 100, which is basically the best you can get. Now, I personally use both ways to invest for the best returns. So what I do personally is I keep no more than 5 to 10% of my money in a certain individual stock, and no more than 25% of my money in a certain sector. I do this because if one sector shoots up really high, I can reap the rewards, or if it crashes or resets, I will not get hurt too bad. And this is for my dividend portfolio, so I collect money and reinvest it every month. I don't really want to take a lot of high risk. And then my other portfolio is for Robinhood. That's just my spec stocks. So I keep, like I said, no more than 5% of my net worth in there. And I invest in the crazy headline stocks like Helion, your electric vehicle stocks that go up 60% in a day and then crash immediately after. And that's just, to keep me up on my toes and keep investing for myself interesting. And I never, ever borrow money or do anything crazy to try to get myself up there. But if I end up making a lot of money on a certain spec stock, I take all the profit and I reinvest it into my Roth IRA or my dividend portfolio. So when I was a beginning investor and I had no idea how to invest into a company, like where to find this company, I use a couple methods which I'll share. I use StockTwits, which is basically just Twitter for stocks, because a lot of people recommend different companies. So if you know the company Tesla or Apple and you follow them, other people put in their certain companies and you do research. And I usually just take those stocks, I run it through the websites I use and see what the company's about and if it's worth investing in. I join free Discords. I'll be creating a Discord for this channel where investors can just sit around and talk and share ideas with each other. And then I also go onto reputable finance websites like MarketWatch, Yahoo Finance, the name brand websites, and just see what the headline articles are. And I just kind of rinse and repeat the cycle and see new stocks. And now the apps and brokerages they actually have like recommendations, like the top gainers or top losses. And if you get bored one day and you just go research your stocks and see different sectors, you're gonna find a lot of cool companies that you wouldn't even know existed. All right, that's all I have today. This is what I did as a beginning investor. This is how I researched my own stocks and how I picked my 2 stocks. And I wish somebody told me about this when I first started investing. And if you guys are new to investing and now you know how to pick your own stocks, I recommend watching my video on taxes, because a lot of people don't understand the importance of taxes on stocks. So it's a very short video. If you just want to know the quick and easy route, just look right up here, click on that link. And thank you guys for watching. I'll see you next time.